Welcome back to Palisade Radio. I'm your host, Tom Bodrovics, and joining me on the call today is Ronnie Stöeferle. Is that accurate, Ronnie?
That was pretty much perfect.
Right on. How are you this morning, Ronnie?
Very well. A bit tired. It's quite challenging over here, but I'm well.
We're speaking on the morning of Monday, March 23rd. Ronnie writes the In Gold We Trust report, which is an absolute treasure trove of information. I would suggest anybody going to look at it. Ronnie, what are some of the key highlights from the 2019 report that you think are coming into view right now?
Well, the theme or the leitmotif of last year's report was the age of eroding trust. So we basically said that in many areas of our life, trust is eroding. We're seeing it in politics. We see the spreading polarization of society. We're seeing it in media. We're seeing it when it comes to sports. We're seeing it when it comes to science. But there's one area where we kind of wondered why there's still very, very high trust or trust capital. That was central banking. And we said last year that actually gold is already in a bull market. So gold was rising in almost every currency. The world gold price was close to its all-time highs, but everybody was staring just at the dollar price of gold. And we said last year in May that if we should go above this resistance at 1360 to 1380, then gold will basically move to the next stage of this bull market, to this public participation phase. So I think we've been spot on. We might now see that this trust in central banking is also eroding because, Tom, let's face it, there's so much going on nowadays when it comes to central bank measures, but also when it comes to fiscal stimulus, that from my point of view, at some point, when the dust kind of settles after the whole panic that we're seeing now, I think people might lose trust in central bankers. So it's very, very, very interesting to see it developing. And I might also give you a little preview to our 2020 In Gold We Trust report. It will be about a golden decade that might be ahead of us.
And we're exactly 64 days away from that being released, correct?
Exactly, yeah.
Recently retweeted something, was proposing to mint two $1 trillion platinum coins to finance monthly coronavirus debit cards. Is that a good example of how people are going to start to lose trust in the U.S. financial institutions?
Absolutely. I mean, that's of course a huge experiment. Yeah. People always tell me after the 2008-2009 crisis, many in, let's say, our camp, the gold camp and the Austrian economics camp said, okay, there will be hyperinflation, and everybody was very scared of that, but no inflation at all happened. But I think those people are dead wrong because we have seen massive asset price inflation. We should not forget that prior, like one month ago, basically, we've seen that equity markets were trading at all-time highs, real estate markets were trading at all-time highs. We saw that bonds were making all-time highs. The art market was going crazy. So there already was massive asset price inflation after the monetary inflation that we have seen. So central banks created $18 trillion out of thin air. Now we've got a massive deflationary reaction. In fact, we don't see just one shock. We're seeing a number of shocks. It's a global demand shock. It's a global supply shock. It's a negative wealth shock. So more than 14 trillion of market cap have been wiped off globally. And half of that in the United States. We're seeing an oil shock, which will have very, very negative consequences for many companies. We're seeing a credit shock, and we're seeing a US dollar shock. Now, at the moment, it seems that central bankers and politicians are in a status of actionism, but also of helplessness. So we should not forget those measures that were taken in the last couple of days, and you quoted, for example, this experiment with those platinum coins, the fact that those things are now officially suggested, that MMT, helicopter money, QE for the people, whatever you want to call it, that they will be the solution to this crisis. It also tells you that from my point of view, it will be, we are now moving in a completely new era. And it seems that this era will basically mean, less globalization, probably higher inflation rate. It will be much more about fiscal stimulus because central bankers, they basically, somebody wrote on Twitter, it's like showing up with a knife at a gunfight. So they are kind of running out of measures. So they will be much, much more aggressive. And we should not forget that in 2008, 2009, the Federal Reserve altogether did 35 different actions, different measures. And only after 35 different steps that they have taken, the economy and the stock market kind of rebounded. So we should expect in this time from, this initial shock and panic until the moment when the market really bottoms, we will see much, much more actions. But then it is a bit like drinking tequila shots. At the beginning, you think, okay, everything is okay. But after 5 or 6 shots and then a couple of, 30 minutes, 1 hour, then you really see the effects, yeah? And you're going to have a serious intoxication at some point and a huge hangover. So I'm as a gold investor and a macro investor, I'm really excited about this current environment, but it also tells you that the solutions to the crisis, they will be a massive, how should I put it?
Hangover.
It will be solved with even more interventionism, and capitalism will be marginalized even further. And this is something that I, of course, do not support.
Absolutely. It seems that the everything bubble has been inflated, and the coronavirus seems to be the pin that has pricked it, correct?
Yes, absolutely. I mean, Tom, you were referring to our last year's report, and we said actually a recession might be around the corner. And don't get me wrong, a recession is something normal, something healthy within a cycle, because it's a reallocation of resources, and good entrepreneurs, good investors find tremendous opportunities and make the system healthier. So I think that the measures that are taken and will be taken, they will try to restore the status quo. And I think that this natural cleansing of the system will be avoided, whatever it takes.
Absolutely. It seems that they're trying to do everything to avoid that rebalancing, but it doesn't seem that they're having too much of an effect. I was reading in your 2019 report that there were only 2 other times when commodities were similarly undervalued relative to equities as they are now, just ahead of Black Thursday 1929 and during the dot-com bubble. What does that mean for the price of gold and the price action in gold looking a little bit forward here?
Well, based on our analysis, gold always goes first. Then it's normally silver following, and then it's the energy space and the commodity sector. And of course, Mike Tyson said everyone has a plan until they get punched in the face. So we thought, okay, this is going to be the game plan. Gold is breaking out, silver, commodities, and energy will be next. Now, thank God we are running an inflation model for our funds, and this inflation model told us a couple of weeks ago that we are moving into a deflationary environment. And we clearly did not expect such a dramatic crash. I mean, this is really probably the most brutal correction since the Great Depression. It even went faster than in 1929. So what we are seeing now, as I referred to before, it is not only a demand shock and a supply shock and an oil shock and a credit shock, it is also a US dollar shock. If you have a look at the US dollar versus the Australian dollar versus the Canadian dollar, for example, versus emerging market currencies, it's going through the roof. Now, commodities are also kind of the flip side of the US dollar. So there's a very, very strong negative correlation. If the US dollar is weak, commodities should be trending higher and vice versa. Now, at the moment, it really seems that the strength in the US dollar will continue. This is something that I think Donald Trump is not very happy about. So he will try everything to get a weaker dollar, because we should not forget that it's an election year, of course, and it's not only the president that wants to be reelected, but also I think parts of the Congress and the House. So I think they will really try everything to get the US dollar down. Will they be successful? I don't know. But we should not forget, when it comes to commodities, this might also be, the cure for high prices is high prices, and the cure for low prices is low prices. So there will be massive consequences on the supply side. From my point of view, in 4 or 5 weeks from now, we could be in a totally different ball game, because this will be the time when things suddenly get more positive. We're already seeing now that in China, everything is almost back to normal. We're seeing over here in Europe, I'm now working from home in Vienna, but we're seeing that after 1 week of quarantine, everybody's getting used to it, and hopefully after Easter, everything will open up again. So I really expect that the worst is already kind of priced in, and then we will see that those massive measures that are taken now, especially the fiscal stimulus, will have an effect. And from my point of view, we always said traditional quantitative easing, for example, doesn't have a direct effect on commodity prices, because you're basically going over the banking system. Now, if you introduce fiscal stimulus, if you introduce more direct measures like QE for the people, like MMT and so on, this will have a much more direct effect on the economy and on inflation. So actually, some sort of a stagflationary environment, something that nobody is talking about at the moment, is over the medium to long term something that we could really see coming.
So in that environment, and as gold and silver start to pick up, what's that going to mean for the mining stocks?
Well, I think, at a gold-silver ratio of roughly 120, silver is of course, it's a bargain relative to gold. We should not forget that many mining companies, also the large caps, were selling off in the last couple of weeks. 2 weeks ago, Goldbach's index, the HUY, was down 32%. But if we have a look at fundamentals, normally in those kind of highly volatile moments, nobody cares about fundamentals, because it's only about emotion and getting out. So this is why this current environment makes me so upbeat and so motivated, actually. We can see that, for example, for the large caps like Barrick Gold or Newmont Mining, by the end of 2019, they reported working capital positions of 4.6 and respectively 3.9 billion US dollars. So they significantly improved their financial situation, and they are running extremely high positive free cash flow, much more than they did in 2018, because the price of gold was on average, I think, 10% higher in 2019 than in 2018. Now, at the moment, the average gold price is $130 higher than in 2019. But now the oil price, which is, of course, one of the most important inputs for mining companies, is significantly lower. So at the moment, it is on average for this year, it's at $28, versus 57 on average last year. So the mining companies will have the potential to generate much more free cash flow in 2020. And this creates a huge opportunity. Now, many people will say, okay, perhaps we will see shutdowns for some of the mines. And this can definitely happen. But I think if you have a look at the really high quality names, if you have a look at the producers, if you have a look at the developers at the moment, it might really be the opportunity of a lifetime, because gold is doing extremely well and it will do significantly better. In fact, I think we go to new all-time highs pretty easily because of the fiscal and monetary stimulus that is implemented now. But gold miners are down significantly, even though their fundamentals are better than in the last couple of years. So I think this is really a once-in-a-lifetime opportunity. And yeah, so everybody should have a very, very close look at those companies. Can it go lower? Of course. But why not buy like 1/3 now, 1/3 in a couple of weeks, and 1/3 when the dust really has settled? Nobody can pick the bottom. I think Dave Rosenberg, he said, we should leave the bottom picking to the proctologists, and I agree. But what you can do now is really make your homework, have a look at the balance sheets, have a look at the strength of the business model, and then buy at least the first tranche.
Before the call, Ronnie, we were speaking about the 3 stages of a crash, and I was asking you where you think we are in these stages. How do you see that?
Yeah, well, I think that as we talked about before, I think it's a very, very demanding environment, not only for us as asset managers, but also, as a family father, as a member of our society. It's really challenging, because this is something that nobody really has experienced ever before. So those shutdowns over here, for example, and those interventions in our freedom on a business point of view, but also personal freedom. This is really something that we haven't seen since the Second World War. But I think, as I've said, it's creating enormous opportunities. So normally, in every crash, it has got 3 stages. The first is panic selling, something that we have seen over the last couple of weeks. Then it's a relief rally from the lows, the so-called dead cat bounce. At the beginning of this move, I tweeted, this might be a dead cat bounce or a dead elephant bounce, because there wasn't too much of a bounce actually, and then it went straight down. But this is the second stage. And then we're seeing the third stage, which is something like a very demoralizing retest of the panic lows. And then we will really get in the very, very hard data. We will get the worst unemployment data. We will see, all the mainstream economists will come out with more and more negative views. We will see that, they will officially now talk about the recession or even a depression. But this will also be the market when the reaction to those news will be not that bad anymore, because the market is normally discounting the worst already quite at the beginning. And then, it's a bit like my wife. Yeah, she at the beginning, she sees the very, very worst. And through all those emotions, when they're going away, then actually, I think that the surprises are on the upside most of the time. But those 3 stages, panic selling, relief rally, and then another test of those panic lows, I think this is something like the playbook going forward.
Excellent, Ronnie. What do we have to look forward to? Can you give us some highlights for the next 2020 In Gold We Trust report?
Yeah, of course. As you can imagine, it is for us. It's very, very challenging writing the In Gold We Trust report this year, but that also makes it more interesting for us, because at the moment there's basically every day there's so much news coming out from central bankers, from politicians, from the market. We're seeing so many extremes that it will be quite tough to explain everything in the report. It will be published on 27th of May 2020. You can download it for free, of course, as always, in German, in English, and also in Mandarin. And we will, of course, write about the status quo, what's going on in the gold market, what happened, what calls that we made last year were good and what calls were actually bad. We will talk about the longer term consequences of those extreme monetary policies and those extreme fiscal policies that are implemented now. We will be writing about the mining space, of course, topics like ESG, but also technology that are really very, very important drivers for the mining space. We will be writing about the de-dollarization, which is a very, very big topic from our point of view. We will be writing about what's going on in China at the moment, of course, also in combination with the de-dollarization. We're talking about also longer term topics like gold and the Bible, for example. It's extremely interesting to analyze those topics. There will be an interview with Barry Eichengreen and lots of other topics. It will probably be roughly more than 300 pages again. The whole team, we're more than 15 people. We're working on it basically 24/7, and we can definitely have an interview after we have released it again.
Excellent. We look forward to that, Ron. As we wrap up, is there anything else on your mind you'd like to speak about?
I think when it comes to investments, all great investments, they begin in discomfort. And one thing that we know is that there's great discomfort today. And as I've said before, the bottom will occur prior to any good news. So I think for gold, I think it's fascinating environment. We're also very, very optimistic when it comes to Bitcoin, because both currencies are not inflatable. So we just launched a fund that combines physical gold with Bitcoin in cold storage with an options overlay to use the volatility of Bitcoin and gold. So this is something that really excites me. And then, of course, when it comes to mining stocks, not only in the gold mining space, but also in the silver mining space, I think this is really a once-in-a-lifetime opportunity. If it would be easy, then everybody would be doing it. But we have to make use of this discomfort and really just follow the facts, have a close look at the balance sheets. And I think if you really do your due diligence, you will see this is a fantastic opportunity.
I couldn't agree more, Ronnie. Everybody can find your last gold report at ingoldwetrust.report. And Ron is at Ron, Stoeferle on Twitter. Thanks very much for your time today, Ron.
Thank you very much, and all the best, especially good health to you and all your listeners.
I think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people. Hit the bid.
How violent that term could be? It actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?